Hi, everyone, and friends in Singapore FinTech Forum, and also the friends on YouTube. Good morning, afternoon, evening. I'm Angela, General Secretary of China Alliance Social Value Investment. Short name is CASV. CASV is an NGO dedicated to promote sustainable finance by collaborating with all stakeholders and to build ecosystem. I'm very happy to be the moderator for this panel discussion on climate change and sustainable finance today. And I also feel quite excited and to have three great panelists to join me to share the insights with the audience. So I would like to introduce them one by one for our audience online. And Xing'an, Mr. Ge Xing'an, he's the CEO and the president of China Emissions Exchange. Emission exchange is a very important market infrastructure initiative for carbon emission trading. And also he's the anchor or mastermind for developing a lot of public policies in green finance field in China. So after a while, he can share it's from the market builder perspective about what's going on in China. And also the Christoph, a father to a new baby. He's the founding director of the Green Belt and Road Initiative Center, which is under this International Institute of Green Finance in Beijing. He's a researcher and authored over 100 academic books, as well as those papers in the field of the green finance, innovation, the corporate governance, etc. And the last one definitely is very important, and it's an investor, and also who is in the battlefield for the green finance as well as for the sustainable finance. He's a China anchor, country anchor for International Finance Corporation, IFC. Not only, he gained the great expertise in China, but also in the emerging markets. So very happy to join them for this panel discussion. Climate change and sustainable finance, that's really a big topic. I just started from, the things we all know. Year 2020, that's the warmest, in terms of the temperature in the world, on the record. And also 2019, our carbon emission reached a historical peak. There's a 59.1 gigatons. That means, December 9th, UNEP released the new report, Emissions Gap Report, yearly report. Clearly, it showed us it's despite a dip in greenhouse gas emissions from the COVID-19 pandemic, the world is still heading to a temperature rise about 3 degree category this century, far beyond of the goals cited by the Paris Agreement. It's that's the 2% control, and also for the best pursuit, it's a 2.5 degrees centigrade. So it's while the whole world tried to combating against the climate change, the financial gap, it's the biggest challenge. And how to channel this capital through these initiatives and financial instruments and financial policies to support combating this climate change. That's something, so this panel discussion would like to, discuss as a starting point. So instead of, we just go all over, under such a big topic, I would like to invite each of the panelists to share their relevant experience, perhaps just to highlight one case and to show where we are. And in order to give us a very real sense, it's from investor perspective, from market building perspective, from research perspective, so where we are. So I really would like to start from our practitioner, Weichuan, from IFC. I know, over the past decade, you engage a lot of important initiatives in China as well as emerging market. Would you like to share, it's one of the case who you would like to give us a picture, or, it's the peak of the iceberg for the green finance, the sustainable finance, where we are, and from the, in reality. Over to you, Weichuan.
Thank you, Angela. Thanks for the opening. Let me offer a little bit experience based on what IFC did in certain countries and what we are promoting in the world. So IFC is a private sector arm of the World Bank. We are a global developmental institution, and we've been a front runner to support the countries in the world to create a policy package to green their economies and make catalyst investment to promote financing and investment into climate projects. So according to the IFC estimation, there are more than 29 trillion US dollar investment opportunities in emerging markets over the next decade. So the sectors for those investments include renewable energy, green buildings, public sector, transportations, electric vehicles, wastewater, and and other new initiatives, new opportunities. So this huge green finance gaps will only be bridged if commercial banks adopt strategies and targets to develop green finance products and services to support the economy in the green transition. So IFC has piloted very successful green finance models in countries like China. I'm very fortunate to experience several interesting projects, in China in the green finance space. About 13 years ago, IFC as the first global institution came to China, and we talked to the government, and we got support from the Chinese government, from the global NGOs, and we transferred group capacity building advisory projects to the local commercial banks to help them understand the energy efficiency market potential, to help them develop lending products which are catering to industrial energy efficiency products, renewable projects, and also to support the development of the energy, the energy service management companies. In addition to offering knowledge transfer, we also provided the risk share guarantee to commercial banks to help them, jumpstart from zero to a quite sizable portfolio of green loans. I mean, from a bank's point of view, risk always the largest concern, before they launch any new products. So with our risk coverage, they were much more comfortable and much more willing to start new products. So now, as China becomes a global leader in the climate space, we are really drawing upon our experience learned from China and expanding, this green finance footprints to the world. So we have established a new initiative. This is called the Global Alliance for Green Bank Initiative. This is to basically help the banks in emerging markets to adopt good standards and set up targets to green their portfolio. So we actually have a very aspirational target to help the banks who join the alliance to reach a target by 2013, which is 30% of their portfolio will be in the green space. And not only their loan operations, their own footprint by their staff, by their bank's administration, will also need to be complying with certain carbon targets. And lastly, banks have to comply with or adopt certain disclosure requirements to make sure whatever they do are transparently disclosed to the public, so that can be monitored and that can be tracked. So I hope with IFC's this catalyst efforts, we not only see success in the country, we see collective success in most of the countries in the world. Okay, so let me stop here, and happy to hear other panelists' views.
Thank you very much, Weichuan. It's a very quick question. It's from your real experience. It's for your observation, those counterparties in China financial community. It's what's their attitude, by working on this sustainable finance or green finance, those projects, or do they have any attitude change over the past decades? For your observation, are they passive recipient, or they become more proactive for this engagement?
Very clearly, we see the past started with hesitation, and then going to experiment, and now we see more conviction from the banking community. So I believe a green finance is a very common topic, in most of the boardrooms of the banks. And large banks, medium-sized banks, smaller size banks, they all understand this is important to adopt, their strategy with certain green aspects. So I have no doubt that the awareness in the banking community is very high. However, the capacity is quite different, according to different sophistication of the commercial bank. So I think that's something we're going to continue to support the banking sector in terms of capacity building.
Okay, excellent. And thank you very much, Weichuan. I think as Weichuan said, it's China from practitioners' perspective. I think it's following those international foreigners like IFC as well as the other international players. I think that the China financial community, they are playing increasingly, proactive roles to, develop or enlarge this sustainable finance. And then I think it's I would like to turn the floor to Xing'an. Xing'an is the CEO of China Emissions Exchange. This is very important market infrastructure, right, for this sustainable and green finance. So Xing'an, for your experience, what's your experience and observation for this public policy change, as well as for those market infrastructures build up in China? Over to you, Xing'an. Hello?
Can you hear me?
Yes, very well. Go ahead, please.
Thank you. Thank you very much for the kind introduction, Angela. My name is Xing'an. I work at China Emissions Exchange, Shenzhen. The mission of our business is to curb the carbon emissions in Shenzhen. So we launched the carbon market in Shenzhen in 2013, which is the first carbon market in China. We covered more than 700 companies in the market. And in the past 7 years, we have seen that this market helped to cut the carbon emissions more than 8 million tons of CO2 in absolute term. And the carbon intensity of those companies has dropped by 48%. So this is a huge result of the carbon emission reduction of this
Very
market.
good program, great. Mm-hmm.
And at the same time, the good thing is the growth of those companies who are covered by the carbon market also very impressive. The industrial value added of those companies growed about 90% from 2018 against 2011. So it's a good or a double win for the emissions reduction and the company growth. So we are very happy to see the carbon market helped the city to achieve the emissions reduction goal and also did not control or damp the growth of the companies. To further the development or the reduction of the carbon emissions in the city, this October, Shenzhen People's Congress just adopted a green finance regulation, which is the first green finance law in China. And this regulation specifically set up an obligation for financial institutions to mandatory disclose their environmental information, including the carbon emissions information. I think this is the first mandatory requirement, disclosure requirement for financial institutions, as my knowledge. But this is a great progress in terms of the path of the sustainable finance development. And we are ready to execute it and carry on this regulation from 2022. So, and I trust that the implementation of this green finance regulation is going to big momentum for the carbon emission reduction in Shenzhen. Yeah.
Thank you very much, Xing'an. Yeah, it is a very big progress, for publishing this green finance standard. Just now you mentioned, it as a law. So what about enforcement? Is it voluntary or, mandatory? Is it soft law or, already up to the hard law?
Oh yeah, definitely it's a hard law.
Okay.
It's mandatory, and if you violate it, you will get fined.
Okay.
And,
so
and
the
penalty measures, also others like credit. Your credit is going to be damaged.
Okay. Further to this, kind of a penalty, is there any incentive, initiative, or scheme built in such green finance law?
Oh yeah, in this regulation, there also set up a series, a package of the encouragement or supporting measures for the financial institutions to develop the green finance in Shenzhen, including the subsidy or credit enhancement, and also the risk assurance, the loss sharing, and the capacity building, talents training, public awards, and also other related supporting policies by the regulators.
Very cool. Thank you very much. Perhaps we will go back for more details later on. Chris, you are a researcher. It's you relay, such, identity just give you a better perspective. You can see a big picture and also have the in-depth, apprehension for what's going on. So for your, it's experience or knowledge, would you like just to share your case or your thoughts regarding to sustainable finance development, combating this climate change, particularly in China? I know you have already based in China for researching for quite several years. Chris, over to you.
Thank you so much, Angela. And it's of course a pleasure to be here on this panel and join this very, very exciting conference. So thanks so much for the invitation and the possibility to present something here. So we had, of course, some fantastic speakers already here also on this panel, and I kind of want to echo some of what has been said already. So my background is I'm the director of the Green BRI Center at the International Institute of Green Finance, where we look at the green finance development around the world with a focus on China and, of course, China's outward investments, which are massive, and where China is definitely one of the largest investors throughout the world. As Xu Weichuan just said, there are, of course, massive investment needs to meet the infrastructure needs, to meet the also basic needs like water supply, energy supply. And this is, of course, exacerbated in the post-COVID-19 world. Now, of course, the idea is to invest in green, to build back better. And Angela was saying there's not enough money to invest in green. I would say there is too much money in brown investments. It's not the question about the amount of money that is available, but it's about the use of the investments and kind of channeling it away from polluting industries. And we know very well which are the polluting industries in the energy and transport sector, and into green sectors that produce ideally no greenhouse gas emissions, and ideally, of course, also no biodiversity loss, while at the same time providing jobs and social benefits. So this is kind of the target that we have to always have in mind. And I want to highlight and then kind of one of the challenges that we often face as kind of in the green finance world. There's a difference between investment needs and investments. It's very clear what investment needs are, but the question is kind of how do we make investors invest in the right stuff? And the financial sector logic is very simple. Financial sector logic is brutally simple. It's about risks and returns. So the higher the risks, the higher the returns need to be. And what are returns? Returns are revenues minus costs. And so if we want to accelerate green, it is so obvious what we have to do. We have to reduce the cost for green. And I can tell you two things that are really, really successful in doing that. The Chinese green bond catalog is definitely one of those measures that really actually reduce investing in green, because it provides such a standardization for investors who are in the end very pragmatic people. If it's very clear, black and white, what is green and what is not green, they will invest in it because it reduces transaction costs, particularly if you have a bond market, for example, where you also want to trade bonds on a market. So kind of if everybody agrees that this is green, then it's very clear to say we can trade our green stuff and we can invest in green stuff. There's also, and I'm very happy about this, last week, the Ministry of Ecology and Environment in China backed a massive study where I was honored to be the lead author, which is called the Green Development Guidance, which also for the Belt and Road Initiative has developed a system, a very systematic categorization of projects into green, yellow, and red projects, depending on their environmental impacts. Now, this, of course, also helps investors to make informed decisions. So that's kind of reducing the cost, making it easy. On the other hand, we have to increase the cost for brown, particularly climate polluting investments. And there, why it's so important, as Xing'an was mentioning, the development of emission trading systems, putting a price on carbon. Now, if you put a price on carbon, it's very clear that polluting industries become more expensive and green industries become less expensive. Now, kind of, then we have kind of the technology, which is, of course, also providing huge opportunities, particularly in the energy sector, where we see a massive decline in cost for renewable, particularly solar and wind, cost reduction that was not thought to be possible even 5 years ago. Kind of the result is that by now, any coal-fired power plant will be loss-making within the next few years. So we're not talking about 10 years, we're talking about 2 to 3 years. So fossil fuel investments are not attractive anymore for investors under normal circumstances. Of course, the problem is that governments keep on backing coal-fired power plants and coal-fired power plants investments by giving assurances, by providing guarantees. So here we need kind of the policy support to make the risk of coal-fired power plants not zero, what it is often right now because of the government support, but actually reducing these guarantees that governments often explicitly or implicitly give. So we have to put the risk that brown investments have onto the balance sheet of the investors. And in countries where this has actually happened, we have seen that a trove of financial institutions have decided not to invest in coal or fossil fuels anymore and are actively divesting from fossil fuels. So over 100 financial institutions, some of the largest financial institutions worldwide have said no more fossil fuels for us. And we want to, of course, stop any fossil fuels. The brown stuff, the coal, the oil has to stay as much underground as possible. Anything that we pollute today will haunt us in the future. And so kind of by understanding the risk that financial institutions have, they have divested it. And to give you a very small anecdote, of course, we're looking also at valuation of different companies. And what is very clear is that fossil fuel energy companies have seen a much worse performance than non-fossil fuel sectors. So with that, kind of the investors are already devaluing and kind of putting less money into fossil fuel companies because they know that this is kind of a dinosaur from the past. And so we have to really support it through the green finance system that is, of course, backed by both market and government incentives. And we're seeing some great progress, but we need much faster progress through a lot of cooperation and international standardization.
Yeah, great insights. I think it's the cost. Perhaps that's a very key considerations, right? How to increase the cost for those polluted or those not green companies. How to decrease the cost for those green business. I think that's a big, and also how to bring this risk to build the balance sheet. Just now, it's you mentioned, Chris, about it's. We made some progress. I think you refer to China market, right? Particularly for those fossil fuel, those energy companies, the transmission from those not green business to green, to energy, or just to get those traditional fossil fuel business behind, right? And still, we have a long way to go. We have to get close. So if we say there is a 0 to 10. Give you a range. So if you look at it, where we are now, it's regarding to, those businesses can effectively address those climate change challenge, and also can transform themselves to embrace those new strategy or business model. Where we are now, 0 to 10, how many scores you're gonna give to China, Chris?
So I think that's a fantastic and very, very difficult question to answer.
Yes.
And of course, you would not. And Angela would never ask a simple question. Otherwise, I would not be happy. So I would say the green finance market development in China is very advanced. It has become one of the largest green finance markets for green bonds and green credits and green funds. So there's a lot of kind of systemic development, particularly driven by different regulators. There needs to be much more coordination also between the different regulators. Currently, we still have clean coal in the green industry catalog and also in the current version of the green bond catalog. So from a climate perspective, the green bond and green industry catalog should have improvement and exclude any type of fossil fuel, which currently there is still in. And then, of course, the next question is how effective is it after you develop a market and have a lot of green funds in your portfolio? The question is, how good are we actually in reducing carbon emissions in an economy? And there we're seeing still a long way to go, and many more signals and many more policies required, and much more divesting from fossil fuels, where we're still seeing investments, and much more into climate action. So, for example, the European Union has a very different approach to address green finance. It has a threshold perspective. If you have more than 100 grams of CO2 emissions, then you will not be a green finance. So something like something very concrete would very much help to drive de facto success of a green finance system in terms of decarbonization of an economy.
Okay, thank you very much. And as we all know, it's very, it's a green growth, and that's very ideal. Sometimes between the green or sustainable finance as well as the economic growth, particularly for short term, this could just go with a very painful trade-off, right? So I think it's the solution is how we can find out those are better off, the do well, the good, those are better off solution in order to, address such complicated things, in an optimized way, and also reduce the cost while we're just moving forward. Thank you very much, Chris. And then it's Xing'an, it's still the question for you. It's when we talk about market infrastructure for sustainable finance, in China, 0 to 10, where we are now. And so what will be your score?
I agree with Chris that green finance development in China is on the fast track of development. The stakeholders of green finance development, including the government, the financial regulators, the financial institutions, and the real economy, are pulling their resources together to make a stronger momentum to push forward the green finance. So I'm very happy to see this has been a tremendous trend in China. But there are also some drawbacks or some shortcomings there. So I would rate 5 for the green finance development in China. But in terms of the size of the green finance market in China, maybe I would like to rate 1 because I see a huge potential there, the growth of China's green finance market, because in terms of the green loans, we only have 1% of the green loans issued compared with the total bonds issued annually. Maybe the gap or the requirement for the green bonds should be up to 20% or 30%. And it's also the same situation for the green loans. The green loans, the total amount of green loans is huge, 11 trillion of Chinese RMB, but it's also only about 10% of the total loans. Maybe we also thinking about that banks are the 80% of the capital source of all the projects and companies in China. You will see that there are huge potential for the green loan and green bond and other green finance market in terms of the size. So maybe I would like to rate 1, for the size.
Right, Xing'an, China, in terms of the green bond, the total size is already the number 2 in the world. But still, you gave a 1 out of the 10, right, in terms of the size when you evaluate in the current, situation, right? I just want to make sure you give a 1 out of 10. Okay, so see it's how much potential you estimate in the going forward. Okay, so then it's it's a Weichuan. So back to those, I know you are experts for equity, fixed income, and also all kinds of the banking and financial instruments, from product design perspective and product development, as well as product launch, financial product launch perspective, 0 to 10, where we are. What will be your scoring?
Thank you, Angela. I think I'm a little bit more optimistic. If you look at China vis-a-vis the other countries in the world, I think China not only had the fastest growth in the last decade in terms of developing green credits, and from the product point of view, China has had the green bond, green ABS, and also all kinds of bilateral green loans from other lenders to the banking system. I think China has done a very good job. I think for me, I would give 8 or 9 out of the 10 to the development of the green business for the China. I think we have to be very clear. I mean, climate is a global issue. To address climate change, requires leadership from the large economies. So I think China definitely has basically performed or fulfilled its obligation, being a large economy in the world, to set a demonstration for many other countries. So I think we should be not shy to give China a high score for this leadership. And going forward, from a product point of view, I think China has potential to be innovative in terms of developing new products. I mean, looking at the electric vehicle industry, looking at the how financial institutions are willing to offer leasing or loans to support consumers, SMEs to purchase electric vehicles. It's been very well understood and developed from a market perspective. And something interesting is that we see technology is playing a more important role. Chris also touched upon this. We found a large missing gap is the SMEs. How do we define this SME has a green operation or not? Do they sell green products? That means they are a green SME. Do they adopt paperless system that would justify them an SME? Or they use energy saving electric appliance, that would define them a green SME. So we are working with one of the leading e-commerce companies in China to try to develop an SME green standard. That will basically leverage all the digital footprints of the SMEs and all the behaviors of the SMEs. Try to develop a matrix, to basically map the business activities and user behaviors outside of the SME into a green standards. So I think China has the potential to develop much more innovative products to address certain missing segments in the market. And I believe that's going to be some model for other countries to follow.
Yeah, I think so. Weichuan shared a very good perspective. It's, particularly leverage this digital technology, right? Particularly AI, the blockchain, you mentioned it's a cloud or, the big data, and try to build up the metrics and to see what's their carbon footprint or what's their not green in the footprint. I think it will just give a very solid data foundation, right, for us to measure that their risk, and also it's good to do the pricing, right, for those assets or as well as for those financial instruments. Yeah, that's a great perspective. Just now, 3 of you, it's just mentioned a lot of great things and what we have done in China or something like that. But it's still thinking about this global Paris agreement. It's how to effectively control the temperature to 1.5 degrees centigrade, and also how to achieve the commitment made by the China government. I mean, reaching the peak, carbon emission peak by 2030, and the carbon neutralization by 2060. Then just means, from my understanding, going to trigger a very profound change, from business side, public policy side, as well as the people's lifestyle. So I would like to invite your insights, going forward. Still, it's what we're missing now. Is we mentioned a lot of great things. What we're doing are not that great, and still, there is a great gap we need to fill in order to reach that objectives, very ambitious objectives. And also looking forward, what things we need to do differently, or what will be the different things we do, just like, the Chris mentioned about those fossil fuel, business. It's, is it possible for them just to shrink their business and allow the green business flourish or something like that? So I would like to hear, all of your insights. Yeah, Weichuan, it seems you're on the screen. Please go ahead. What do you think?
Sure. Yeah, I think because I have, my bias, right? I work for the developmental financial institution. I look at China, I look at other parts of the world. I think what China has been successful in terms of a policy-driven climate and compliance-driven climate investment has been very effective in this country. And I think this should be somehow learned by other countries. We actually already organized a knowledge exchange tour by the Chinese central bank and a few leading banks in green finance, to be visited by financial practitioners from the neighboring countries, Indonesia, Thailand, and Malaysia. They've been constantly learning what China has been delivering and what China has done right in the policy space. And on the other hand, I think China, yes, was benefiting so much from this policy, strong policy, but we need more market-driven intervention instead of only policy, orientation, right? And particularly, we see, private sector, has not been given equal treatment in terms of allocation of capital and fair policy support. So my personal plea is, I hope the Chinese regulator would have a much more setting up a much level playing field for private sectors to invest in the green space. The subsidy should be much more equally allocated to all the participants. Having the same public sector capital or private sector capital. And, we need a policy, but the policy has to be good quality. It has to be effective. We don't want an over policy. We need this exact good policy for the market to develop.
Exactly, right. How to, do this transformation from the regulator-driven or policy-driven to market-driven, right? How to bring those private sectors players to be the leading role, to play the leading roles in this market. Yeah, exactly. Weichuan, that's also the exact things Casway, the NGO currently I'm working for, it's has been engaged over the past years. But trust me, a lot of hardship. And when we approaching those private sectors, forever they're talking about what's the return, and could you just show the alpha, and also it's how we can just integrate, how we can, we are the assets managers, how we can move those assets owners, those, the deep pockets, to engage in this market, something like that. But, I would like to listen more from Xing'an, what do you think is in the future, currently what we're missing, and looking forward, what else we need to do, how we can do it differently or more effectively.
Okay, thank you, Angela. I would say the global harmonization of the sustainable finance taxonomy is essential and a pressing one. And also we need to make this taxonomy aligned with the Paris Agreement, because the problem we are tackling is global, and the capital is global, and the challenge is also global. So we need a global alignment of the taxonomy of what kind of economic activities the sustainable green finance should support to make sure that the green finance could flow to every corner of this planet where we need it. And also the harmonization of the taxonomy together with the environmental information disclosure of the financial institutions could lay the strong ground for the sustainable development of the sustainable finance, because it's going to build a strong commercially viable ecosystem for the sustainable finance to develop on its own momentum, not just the policy-driven, model. So I would say the global harmonization of the taxonomy and also aligned with the Paris Agreement is a very, very important thing. Thank you.
Yeah, it's talking about a commercially viable, it's an environment. Do you think it's, where we are now? I mean, is it reality already? Or, how can we make it, if it's not yet, how we can make it, it's a reality, just to make the dream, walking into the reality. Then we make it commercial viable. It's because, a lot of those initiatives, those projects, very important for the climate change or sustainable projects, SDGs, still they are long-term and low return and high risk, right? It's how we can make it commercially viable.
I would say that
another very sharp question, but yeah.
Yeah, definitely it's not a reality right now for the sustainable finance to be commercially viable, at least in China. The key thing for us to build such a system is that we need a uniform and transparent system to support the green finance development. The key pillar of it, one of the key pillars is the environmental information disclosure, to make sure that the investors investing money in the true green projects and the green projects produce the true green benefits for the society. And this is one pillar, but also there are other pillars like the education of the asset management or on the green investment capacities, or the willingness, or the mandatory requirement, etc. The supply of the green capitals, and also the information, transparent information disclosure. I think these are two very important key pillars for the commercially viable ecosystem for sustainable finance. Thank you.
Yeah, make a lot of sense, right? The information disclosure, transparency, it means a lot, right? And Chris, it's like to hear your insight. It's what we're making, and also,
I will be.
Yeah, would you like to address? It's Xing'an just now mentioned. It's do you think it's a harmonizing a taxonomy global, or we build up a global, universally accepted is a business catalog for this green finance or sustainable finance? Is it possible? Is it workable? What do you think?
So I think that I will be very short also because time is running out. I want to kind of also address this point, but I think there are 3 points that I want to make on kind of how do we make it possible. I think we have to have an immediate stop in coal investment. That's number one, kind of how to address the climate change through finance. And that's a government mandated stop in that. The second thing is integration of biodiversity and climate. We often forget that biodiversity risks are equally important, and by integrating climate and biodiversity finance, we actually have a huge opportunity to address both. So for example, through afforestation. And the third thing is, of course, risk integration that has been mentioned before. In terms of a global harmonized standard, I think it is always a dream. I think we have currently very different types of standards. We have process standards like the IFC safeguards. We have input standards like the Chinese Green Bond Catalog that has clear industries. And we have output standards that have thresholds. So integrating those is possible, but requires a lot of negotiation. It's just extremely, extremely hard. And kind of the last thing that you can do as to address climate change, I think also as an individual, I want to highlight 3 things for everyone. Live healthier, bike more, don't take the car, eat less meat, eat more vegetables, and have less choices in your wardrobe. Don't consume so much, but actually clear your mind, don't have too much stuff, declutter your life, you will be happier, and you will, in the end, have a better climate for all of us. So policy, the banks, and of course the individuals.
Yes, yes. Thank you very much. Yeah, thank you very much, Chris. Since we are almost running out of time, and this is a very intensive and interesting discussion, but I think we just started. It's just a starting point. It's really because we are talking about the big ecosystem, and also there's so many stakeholders and are engaging at the same times, very interactive. And also the China is such a huge market with a great potential. So I think it's, once again, I would like to thank the insights shared by the three panelists. And climate change is the common challenge. And I just, panelists mentioned, it's also, capital, it's also a global mobilized, it's assets. So it's how we can effectively leverage this sustainable finance to combating this climate change. That's not only the things for discussion, but it's more likely things for action. So once again, thank you very much, Chris, Xing'an, and Weichuan. Thank you very much for insight sharing. And also, this is the panel discussion of climate change sustainable finance, hosted by the UNCDF and moderator, Angela. So I think I would like to wrap up this panel discussion and turn the floor back to the host. Thank you for all of the audience. And thank you very much, Xing'an.
Thank you.
Thank you.
Thanks.
Thank you, guys.
Bye-bye.
And
Bye.
Chris,
Bye-bye.
Bye.